with the fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Yo! Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable part. My cat wanted to join today. Hope you can forgive me for that. So, yeah, let's take a look as we start off the week after the weekly candle close with Monday, February 27th. So we caught the bottom of here, talking about a liquidity grab here. We saw the continuation up here. We put out how you would scalp, put a trailing stop loss to take this up to here. We said it would potentially fade as it would get to a certain region. Let's see where that was. We said it would fade on the, possibly on the 706 or the 0.65, or if you're getting bullish, you get up to this fair value gap, which we did tap into and start to pull back. Now we're starting to reach up to the 706 of the bearish projection on the trend-based fib extension tool. Let's first go back to our cool little diagonal fibs here. We can take this off now. And we've bounced off the mean, came back here, hit the 618, came down, got rejected off the 0.5, came down to the 382, double tapped off it, broke through this diagonal resistance, came up through here, traversed through the 382 of the diagonal resistance, and we're starting to hold right on it on the hourly. We kind of got closed just beneath it, and we're up above it here on the 15-minute hourly time frame. So let's try to do this short but sweet this time. So it looks like we had the inverse head and shoulder took us out. Now we're getting the retrace that we put out yesterday. You can call it the double bottom kiss of this break of this resistance point here. So let's just go back to where we had with this. All right, so this is what's left of the fair value gap that hasn't been tapped completely yet. So we could come up to here and get still rejected off of the top of this at 23,703. Let's go back. Let's go right into the liquidity and see where all the liquidity lies at this time. To load. So we talked about this bubble getting hit at 23,616, and sure enough, they came right to it. Let's go and see what happened to him. So they went right to his liquidation point, bounced off his liquidation, said thank you for playing, slide his chips off the table, and then came back and cleared these late to the party longs, bounced off their liquidity, came to these shorts, and then these shorts opened here, and right now we just have this 47, 53, and 31 million here, and we got a 118 million longs here, just below the price point here. But if we go back to the larger scale stacked zone, if you look over here on the right hand side, you see this large amount stacked. We're still imbalanced to shorts by 7 billion on this 6-day 1-minute time frame. So this still strikes my fancy at 23.72. You got 165 million there stacked, and even up to this point you got 23.78, a bunch stacked up here, and then even more up here potentially at 23.98. So these bubbles are still stacked pretty thick up here on the 1-minute time frame. So this entire region is not out of the question. You got a bunch of stacked shorts and sparse longs down here on this 1-minute time frame. So that's the immediate impression that it gives me. And now we go to the heat map with the different time frames and juxtapose that. Let's skip the 12-hour. We already know where that's at. All right, so the 7-day. So we came up and grabbed these, knocked these $1 billion out, and then came back down into here. We got $1 billion down there. Sorry, yeah, it's $1 billion. 23.1. Still getting this stacked amount down here at 25.28, 3 billion, 2 billion, 1.1 billion. 3 billion, 3 billion. So it looks like in the immediate vicinity, the longs have more stacked up here. You do have some down here, but you got a lot starting to stack up here from before that's now on the table. Just a hop, skip, and a jump away. this was the thing that was kind of concerning to me, because while it looked even on the 7-day, on the monthly, you got clearly like 10 billion, 10 billion, 10 billion, 6, 7, 6, 7, 8, 7, 6, 8.8, 6, 5 billion, all the way caking the way down. And up here on the, 5, 5, 3, 1, 2, 3, 2, 1. So on this time frame, the shorts are overly weighted. The longs are weighted more in balance down here. Although you do have, 12, 10. You have double digits in the billions up here above at 25.3. You got this nice caked layer waiting for you to be picked in the 8 billion amount. If it could slide down and grab that. The narrative structure would break if you broke down beneath this, and we would fall completely bearish if we broke down off this 20,800 region. So we would likely see a bounce down below there at that before we got to that, but just the entire way is caked down more than the region above on the monthly. If we go to the 3-month, we see the same picture. We got 23 billion, 18 billion, 10 billion, 14, 15, 12, 24, 34, 47, 30, 17, 16. It's just filled with double digits, 20, 30, 30, 33, 40, 43, 25. Starts to thin out at 18k. It's 8 billion. So this whole region is just filled with liquidity to take. I mean, up here you got 6 billion, 8 billion, 4 billion, 6 billion. It's single digits until you reach the 25k region. The only thing you have on your side for going up right now is the yearly. We've been going over this a lot earlier when we were up in that region, which was we had, 162 billion. You can see it, 162 billion up there at 25, 600, and then 26k. You got 100 billion. So you got these large amounts holding you up here. That's basically the only thing keeping you from just dropping like a rock. And yeah, let's look at, so it looks like it's the monthly and the 3-month in terms of the thickened up region. And we went over yesterday how this was 98 on February 11th was only 4 billion and now 24 billion. So in the matter of 14 days or whatever, they doubled it up, if not more. In this entire region, you can see the heat getting thicker down here. So it's getting a nice smooth icing to just come dip their fingers into and pop, per se. Which is why we were putting out the idea with the bearish projection for this impulse retrace idea. So you do 3 points on trend-based fib extension tools. You do 1, 2, 3. You have the impulse and the retrace. Within that narrative structure contains the future a lot of times. You might say that's crazy, but let's just go back in time and see if this is true. So this was what happened when we were at the top of Bitcoin here. I did this for a different group. And they were like, where's it going? Illuminated. And then I told them, it's possible we go to 41k this weekend. And then literally 15 minutes later, we went to 41k. So I remember this very clearly. So we'll just go back and show you what we did to project that out into reality and to see it come to fruition. So here we go. We'll go to the daily time frame. So the same thing occurred here. So you have the impulse and the retrace, right? So within that narrative structure, actually here, there's this one. This is to be more efficient. So you had the impulse. Oops. The impulse and the retrace. Hold on 1 second. Yeah, so this impulse here. So basically this impulse drop, now that was what we were predicted right there. So we had that over here from this impulse and this retrace here. Basically the lackluster retrace here was what had that inside it. So you have this impulse to the downside and then the retrace back up. And you get your 236 entry here, and then boom, you just dropped right through into all these regions. And I was talking about like possibly going to 42k, even lower. And then I remember here I was out grocery shopping, and then in 15 minutes it dropped all the way down to that region. So these trend-based fib extension tools are ideal for charting into unknown price action without having to look at support and resistance to your left, just kind of using the impulses and the retraces to your advantage. And then the 236 is where you would see if it breaks below that, you're a go for that idea. So every time it breaks beneath it, you go, and then when it doesn't go to any of the regions there, you just take profit. So let's go back to where we were. Alright, so yeah, you're getting a rejection by the looks of it on the 706 here. I was hoping that you would come up and at least get some of this, get a rejection on that bubble of the fair value gap here that we looked at on the 1 minute. Like one of these guys. This could be an inducement to get, this is the precursor to the open, so this is like a kill zone to try to knock out some of the 100x before possibly going up there and grabbing them. Let's go ahead and turn on Momentum Master and see where we stand in terms of channels and all that fun stuff. So we had the crossover event on the hourly. Earlier today, you could have just taken that and just wait for the crossover event, getting the higher time frame suppression of the daily and whatnot turning on you. So we held the cloud strong, still thick, starting to curve a little bit, getting a little bit less thick as it was back here, but it's holding, obviously the volume is holding strong on the cloud. And yeah, looking at the 22 hour. Got that thick band going up. This was the bearish point where we were beneath it, but since it was in this way, we were going to at least bearishly retest it up, which we did, and held above it. And now we're coming back to KISS to see if that's true. We had a large amount volume exit up here. People are unsure of the long. There wasn't that much interest that came in here on the cumulative. We had a large amount leave here, and we managed to hold, so that kind of like kept us going up a bit. Let's see what she's doing. And we got the 12-hour here. Not really seeing too much on this curve here. We were talking about this coming down, the Williams coming down on you and suppressing and possibly curving this, and then seeing a dump come down. You are getting this to start to curve slightly, but it could just curve back down at that point. Still go down like that. And the 6 hours should be overbought by now. Yeah, the 6 hours start to curve. You could double top and then go down. And the 4 hour. 4 hours starting to come down. You could have that double top scenario before we come back down again. Double top, come down. Double top, and come down. We're right on the weighted moving average and the adaptive. We initially got above it, came back, broke down on both, attempting to hold the weighted moving average and the 706. 706 is where it drops it. You saw that previous example. The 706 is where it just drops the permission to just stay and just will go down like a rock. So it's all what the dollar's doing too. So let's just see after we get this. We got the hourly trying to stave off the dump. So what I was kind of thinking about was like, you know, you got the first hit here, and you know, you can get a second hit and come down from this region. So taking out this globule of shorts here at 23.72 and slightly above that 23.73, you know, just this region, you can clear that thick band of liquidity here, even though you got a lot more up here. Just breaking the range might be difficult. There might be people that cash out. Got all those tens of billions down here. You just gotta start to think like a market maker. Like, what do you want? Where would you go for the most amount of money, you know? And what are most people feeling right now? Like, the main retailer feeling bullish, right? They're seeing like a cup and handle pattern. They're drawing their like, you know, bull flags and everything. So they're drawing like, you know, stuff like this, you know, and then expecting like measured moves, which may or may not occur, but they're doing stuff like this, right? And that would put you at 24,433. 24,433. Yeah, you do have some there. The thickest is right around here at 24K, like just above that 24.2. Just, and there's no real the fair value gap is right there on the hourly. False move Monday. Let's go to the dollar and see what it's doing. So we were talking about the different fair value gap zones, places it could go off here. So the main thing that I was seeing about the dollar that was interesting was, if I recall, it was the weekly. So the weekly was getting a bullish cross here on the leading moving averages, the baselines. So you're getting this cross on the weekly that was just beginning. So we could see like a slight pullback on the daily at some point in the beginning of the week, and then see a continuation on the dollar, which means a pullback for the market itself. We already got pre-market movements of a % down, and it looks like getting that adaptive weighted moving average bounce, possibly on the 2 time frame send it region. Alright, Cat, you gotta go the way. Sorry.
This was our place. I felt you there. I know your presence, and I'm not scared. Your arms around me, I'm warmer. This was our
So we're at the bottom of the channel here on the 4 hour for the S&P, and it's at a pivotal stage in terms of a breakout retest zone. So you kind of had this breakout and then retest of this trend line that we either fall back into and hit the fair value gap here for a larger pullback, or we see the continuation move. So it's kind of a pivotal time for stocks and Bitcoin, whether it continues or it has a larger pullback for the week in terms of, you already broke this structure on the 12 hour, which is kind of bearish. You still have this 12 hour coming down similar to Bitcoin, which causes this to go flat and get suppressed on the stochastic RSI. So lackluster momentum on this higher time frame. And if you go to the 6 hour, wants to roll over on you one last time maybe on the 6. Kind of curve down on here and kind of reset for the Williams, at least on the 6 hour, there's nothing, not real in confluence zone other than this adaptive down here for it to bounce off of, just below that trend line. 4 hour. 4 hours in a good space, just looking at the stochastic here. But it's been getting suppressed by the Williams flow, which can't express itself fully. It keeps fading. So it's looking like it's getting to that sweet spot on the 4 hour where it could kind of start to curve and save the 12 hour from taking it to hell in a handbasket. And you're getting that kind of like bounce off the RSI with the rising sun here on the Williams and a crossover on the leading MACD. So the hourly could take you for a ride to the upside on the S&P right here with the 4 hour in conjunction with it. And the 15 minute. Get a double top scenario on the 15 minute. Let the bearish divergence start to play out. Set. Now you got the 5 minute in your favor. Just above the cloud. So you had six time frames in your favor down here, so it's not the place where you would want to short in general. And the dollar, just in a grand macro vision perspective, like it's due for a pullback on these 7 time frames. When it's on a run, though, these two can send it. So in general, you have, just thinking realistically speaking, you have, one hit to the high here, you have another hit to the high, and you turn on the higher. The high-low look back, just to be clear about it. So we put the higher high and lower low look back here. So you have basically that second hit to the high. So you'd be looking for like a third hit to the high. Like, could you go up to these regions if you're ultra bullish? Yes, but realistically speaking, you're maxed out on the daily and the 3-day and the weekly. So a pullback on the dollar isn't necessarily out of the question. I mean, you have these higher time frames here, which are kind of exhausted by the look, and that's what you're seeing, these pullbacks here. So you want to look for a third hit to the high, power of 3s, and then you look for some sort of third hit. Or it could fade right where it's at right now. Got that support on the side. It's pretty interesting. It's like you got like bearish and bullish sentiment for both scenarios. So the dollar can continue up from here, as well as Bitcoin continuing up from where it's at. They're at a interesting point of contention here. Gold is just kind of chilling. People investing in gold, and they're pulling back and putting it somewhere else right now. This reset on all these time frames. Are people looking to get out and move gold at some point? But you're beneath all these. So if you fall back in to this, then you'd be going down sub 39 all the way down to 38. Now it's a pivotal moment for bullish continuation or not, and I can only see the liquidity for the Bitcoin idea at the moment, so I'm going to just focus on that right now. But you have the idea of a larger pullback on the dollar at some stage in the week. This is false move Monday, so they could see some shenanigans in terms of like rising one and then reversing it after lunch. So that's what I'm looking to play right now, is an upside similar to what yesterday was it goes up and then it comes down at some point. Where is that point going to be is the question that we need to figure out. So we're going to figure out what that point will be, and that shall be the time to call it a night. I think short and sweet. We already had this marked off from before, so we have one up here as well, and the measured move of that cup and handle will put you there. This cloud is really thick, and it happens to coincide with the fair value gap. So right there, that sign of the thick cloud is showing you resistance naturally. You see that as support when it bounces off the cloud. That's support, and then it goes up to the cloud, meets it with resistance on this thinning. Here is a bearish retest dump. So here it would take a huge amount to break through that. More likely you'd go up and then double bottom. If you were going to have even a bullish scenario here on the 4 hour, which is overbought, you would have kind of like some sort of retrace at some stage, some sort of rejection that continues higher from this cloud region. Still have that thickness. So you just look at it and you can back test this too. Like, this cloud gets thin, and does it immediately turn, when it starts to thin and curve to turn purple, does it immediately just turn blue? It does break through it here, and then it creates this bluish volume entering, and then it starts to thin, but it takes some time for it to thin out, for it to curve back to the upside. So you have to you meet with resistance on it, and that causes this thinning to occur in the formula. So just based off of how thick this is on the 6 hour and the 4 hour is telling me you're going to meet with resistance at one of these regions up above here. And on the 4 hour, you're super thick right here at that fair value gap range. So we got one rejection there, you get another rejection there, and you come back down. And that coincides with the liquidity quite nicely around this region. We already got that guy. So just seeing it go above this range in the interim without inducing more back in. When you got all of this down below, it's kind of iffy to me at best. I took a long scalp off the bottom here, but of this, just to see how far it would go, but I don't really know if it's gonna hold that long. Sorry, my cat wants to get out. Give me a sec. So you're beneath the 706, so if you're in the bearish projection mode, the higher high would be up here. So we're waiting for that one last hit. It's weird, you have the same kind of 1, 2, 3 hits idea. It's that third hit that's going to be the moment of truth, really. That third hit. So you got that. We had that cascading thing that we went over last time about how you can take these crossover events and then watch them cascade, or take them to the next crossover and then get out and then look for another crossover event. We're not going to go over that today, but so you got the thick cloud here that we need to get above if we're going to continue on a bullish path here. It needs to start to thin and curve up, and you're at that 706. We're meeting with that resistance against the 706 trapdoor to the downside. None of these bubbles were there earlier today, so they've thickened up this region. It used to be just this guy, and now they've thickened it up with more pools down here for these lines. These three guys, they're trying to induce some liquidity. Let's turn on the liquidation levels and see where the 100x stand. Why is it not loading? Hello? That's so weird. Yesterday it was loading just fine. Alright, so I guess we can't see that. It's too bad. Is my connection not stable? I guess it might. Are you guys getting proper connection? says excellent, so it's weird. I wish I could see the liquidation levels. I think streaming is what's causing the thing not to appear. Anyway, so yeah, it's been holding this weighted moving average on a lot of these time frames. That's kind of the bullish signal that I was putting out when I was giving the scalp idea here. Holding the weighted moving average, the 200 weighted moving average, is kind of a nice confluence idea, and then getting sucked up to the adaptive and then meeting with rejection, and there was fair value gap confluence there, and then we got the liquidity bubbles here that got popped as per that region, and then that's when we came back down and stabilized, absorbed it, and then they sold that off to absorb it on the long stuff, and then possibly re-inject that back in to take out. I mean, we're just reiterating the same stuff, just to take out these bubbles over here, because it's highly stacked, as you see. 33 million, 33 million, 34 million, 33 million, 54 million, 22, 26, 34, 30, and just comparatively there's not much down here. So seeing this go up to this region to take it out on the short term, to at least go up to one of these regions, we looked at possibilities of even going higher. So you don't look for these kind of instant shorts. You want to see it fade on 3 hits, the power of 3s. You know, you want to see 1, 2, and 3, and be careful about, methodical about when you enter, so that you experience the least amount of drawdown, and it's just a smooth entry and goes straight up from that point, similar to what we put out yesterday without it even going beneath that point. So you want to see that, because it would have, you know, confluence on your side. But very rarely does it do this V-shaped thing. So you'd want to look for a 3-hit idea for taking the short, and wait for it to not stop making a higher high. So as of this moment, you're not, you want the baselines above the price for a short like this, and you want the higher high to be intact without it making a higher high. So if it goes above this point and stays above this point, then it's a bullish scenario that you don't want to enter at this stage. You just basically look for 3 hits to the high. I'm still bullish in this scenario to at least come up and grab this zone, if not higher, and then we reassess for a short at that time. But if it comes above 24 200, 210, then this bullish projection is negated completely, similar to when the bearish projection is negated completely. So if it gets above this level, the bearish scenario is finished, and then it's still, bullish mode is still on. Similar to when we had the bullish scenario here. And then I said, you know, if you can stay above this 24 to 225, it's kind of interesting. Look, they coincide really. So you got that same level. If you get above 24,225, then the bullish scenario is still in play. These regions become in play. So it looks like 24,225 is the key zone to look at for either bearish or bullish. If you stay above that, you're bullish. If you go below that, you're bearish. Very simple. And the measured move of that cup and handle slash, double bottom idea that we put out yesterday, in terms of like you would see it come back to that measured move, takes you up to that region. $24,433, 24433. So I'm not short here just yet, even though the 4 hour is kind of spent. We seem to be holding the weighted moving average and the adaptive. We're kind of caught between them, as you see here. We're caught between the weighted and the adaptive. We're kind of like figuring it out, but we've held pretty strong. We're not even going down to the bottom of this. We're not going back to the 786 just yet. So this hourly time frame is looking to kind of push us at this time. So the hourly time frame is about to take us off. This is where I want to show you about Momentum Master and its ability to show the multiple time frames. So we're going to throw on the higher time frame and the lower time frame here and just take a look at how they interact. All right, and we'll go over this in detail. So we're on the hourly time frame, and you have the 30-minute and the 4 hour beneath you here. So you have the 30-minute on the orange and yellow waves here, and the 4 hour is curving down on you. So you have that suppression wanting to push down from the 4 hour, which is the higher time frame in fuchsia and aqua here, and then the current time frame is the hourly. So you have the 30-minute and the hourly wanting to push to the upside right here, and it could curve this 4 hour, and then the 4 hour kind of double tops, as we mentioned at the beginning of the live, before coming down. So that's where you start to see how the time frames interact with one another, in the sense that the hourly time frame here, you got that strong cloud support on the hourly, even though you're getting this sell-off, this exit volume. You're getting exit volume here, but you're getting you're getting it to hold well. So the money flow is flowing out, and yet you're holding price. So that's kind of like a hidden bullish idea, in so far as I can tell, similar to how we had this, and we had this sell-off, and yet you started to see money flow back in and come up, and then there was this hidden bullish on the money flow. So you could start to see that appear, where you see the money flow, hidden money flow divergence start to come back in on you on the hourly. So the hourly and the 30-minute could like curve the 4 hour here. And if we go to the 4 hour, you can see how the 4 hour and the other time frames interact here too. So on the 4 hour, you have basically the hourly down below, and you have the daily time frame below you too. So the daily time frame is kind of in a downward momentum at this time. It's not in your favor, so that's suppression on a huge move potentially. But I just thought it was pretty cool how you could see potentially, if the hourly plays out, what's going on there. We also have a leading moving average of the MACD, so I'll show you that too, and then we'll call it a day and let you just chill out. So the MACD here, you show this MACD, and we'll fill it in for you and turn off the other time frames of the stochastic RSI. And this is a leading MACD formula, so that's here. So when you see the MACD about to cross, you can get alerts on that when the MACD crosses, and it's a leading MACD. Most MACDs are latent, but this was put in a framework of 100 to negative 100, so it's sped up in a sense, formulaically speaking. So when these cross, you can get these pump and dump notifications on these crossover events on your phone. I set it on the 5-minute just so I can kind of keep tabs of the direction of the market and where it was last. But if you're a bigger time frame player, you can do that too. So the one thing I'm overlooking right now is the Williams on the hourly. And why is that? Well, it's starting to curve at the 50 zone. So you could see this kind of curve up with the MACD and kind of push the hourly up right here based off the time frame support of the cloud and whatnot. I'm really liking the hourly time frame right now. I wish this thing would turn on with the liquidation levels, but it's not working. So it's sparse all the way up to 25.7 basically. Like they're trying to induce some liquidity enter. So I'm not going to stick around to see that. We'll just see how it plays out. But you have the idea, bullish and bearish, like if it fades up here and you get 3 hits to the high, then you know what to do. If it bursts through and goes above the 24.2225 region, then the bullish scenario is on and you just let it kind of ride. And that's about it. I mean, you have bullish and bearish projections, so I don't know what more you would need for that idea to play out. And on that note, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part and coming in tonight, and happy trading. Peace.